The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. And as always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Wow, I'm told I'm black and white. I wonder how you do that. I don't think that there's a setting. Maybe that's color. Yep. Maybe it's time to get the old new camera, or get a new camera out here. Anyway, we come to you at this time. And what can you say? I mean, as we talked last Friday before we left on vacation, wasn't expecting to see a lot of movement in the markets. We showed what the options were telling us. The only thing that's really happened out here in options. Oh, by the way, as we start the show, we're off 4 points on the S&P. Cash 2270.76, 2.11 billion shares. So volume a little bit bigger than we saw last week. But I wanted to get to the expiration chart again. There is kind of a little bit of difference out here. We'll look at it a little closer out here. And they're starting to firm up for Friday's expiration. But for the most part, what we close out on the SPY's 225 on Friday, something like that. And pain's just a tiny bit below. For those people not familiar with what I do with options is if you historically look at 85% of them going unexpired, you try to find the maximum loss point, and that's kind of where the standard distribution will start. So, if you know anything about base statistics, you can put a kind of a bell curve on most of these and figure out they don't go out that far. Normally, you're talking at most 50 points up or down in it. So we'll zoom in a little bit more. But had about $700 million that was guaranteed to go down the toilet for the option market makers. Now we're starting to see that money kind of build toward them as premiums continue to fall. So what's this tell us? Well, you always want to add about 20, unless things are really horrible, i.e. we're in a really bad bear market. You normally want to add about 20 or 30 S&P points to the prediction. That gets us right pretty much where we're at now, which is at 2270. So options continue to firm. They continue to firm at this level. And the question is, what does that tell us? Had a lot of people asking me, with, the possibility of everybody going bat crazy come Friday. Is there anything else that we want to look at out here? And I said, I don't think that politics is so much the issue out here. I could get into a lot of political discussions, but from my reading out here, they're back to the same things they were before the election, phony polls, other stuff. That tells me that they're still on the wrong side and that there isn't any kind of real groundswell or change or anything else. If you missed it, did you know that you can make $2,500 a month being a protester? Now, that was an interesting article today. Lots of ads in Craigslist to become a protester, starting this weekend at $50 an hour, Friday. There isn't this giant groundswell. The press is back to what they did before, which is not very happy with the results of the election, so they're going to try to color it as much as they could and can. And it just seems rather ridiculous that the same people that lied to everybody about what was going to happen is back trying again. But to me, that tells me one thing, not that I can stand here and talk about politics all hour, but that it's probably really not that big a deal. When your case is very good, you really don't have to do those kind of things. So we're looking at what they call astroturfing. That is, there aren't a lot of the kind of things that a lot of people think they are. It is fake grass. It's not grassroots. So I don't think politically there's a lot going on out here. I know the press is trying to drum it up. To me, everything is about what happens next week, which is earnings. And all the political stuff will fade. We will get into earnings and forecasts for earnings. And to me, that is what truly is going to move the market. But we may have yet another week out here. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can post messages in the den. Question in the den. Please tell us about JPM, Goldman Sachs, Bank of America, and Morgan Stanley. I don't know what there is to say about them. A little bit disappointing, but I think everybody was, they were a little ahead of themselves anyway. So I don't know if there's a whole lot to talk about and all that. We'll get into earnings and the earnings calendar coming up. Maybe a more specific question, John, other than what I see in that. I still think interest rates are going up, so that probably tells you everything you need to know about those folks that are in the banking business. Anyway, back, I was distracted. I was divergent. I digressed. Anyway, I'll keep an eye on this, and we'll talk about options all week. But it looks to me like no matter what happens, they're more than willing to let this market kind of just sit here around the 2270 level on the S&P cash. Maybe something changes, but to this point, I don't. What else is going on out here? Well, we need to kick this party off, and that always starts with a little bit of history.
And it's all just a little bit of history repeating.
On this day in 1946, it's time to slow down, Mr. Bull. Yes. There used to be an ad where I grew up, and it was a Ford dealership. And it always, I'll remember it till the day I die. Get out of my barnyard, was it Colonel Billy? It was a Ford dealer. Oh, it was a horrible, horrible ad. Unfortunately, it was one of those ads that they ran all the time, and now I'm stuck it in your brain. Anyway, slow down, Bull. The stock market is up for more than 20 cents since the end of World War II. It ended just 5 months earlier. The Federal Reserve Board temporarily eliminates all margin trading. This is before options, folks. This is before futures, preventing anyone from trading stocks with money borrowed from a broker. They pulled it all in one day on this day in 1946. If it happened before, it can happen again. I don't think it's going to happen anytime soon. Always could. We'll be back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I have a question in the den. Do tell us your options experience doing Ebola when the SPX cratered. And to tell you the truth, I'd have to go back and look at my records. I suspect that what we're talking about is when we were along the UVXY. Is that what you were when those things happened? There were a couple of huge moves that we had some monster rewards in a matter of weeks. I think that's probably what the guy's talking about. And I'll tell you this, and it goes back to something that Tim Ord told me, and I had to learn the hard way back on 9/11 in 2001, and that is surprises will come on the weak side of the market. And normally, the charts will give you at least some level of that. So whether it was Ebola or a comet hitting the Earth, asteroid, to be precise, or even 9/11, if you're trying to do the short-term trade, because I remember 9/11 because I had about $20,000 in calls going in to that week's Friday, and they instantly turned to nothing when the markets opened back up. And it really did leave me looking at what was going on in my long-term, short-term trading. And that was, even though the next few days should have been up after 9/11, overall, the downside and the downside surprises would come from the downside. So if I'm doing any of these things, there's probably, like on the UVXY, there's probably a mathematical angle. I probably have, and we talked about it Friday, I do a lot of scans, so there's probably 10 tons of stocks that are up at highs on light volume, right? So the conditions are correct. The problem is I haven't been able to trade the UVXY really. I think we made some money last time, but it hasn't appealed to me because there's just not that many stocks either on the high side or the low side testing volume lightly, right? Either stocks are going higher and they're high already, or stocks are going lower and they're low already, but there aren't a bunch of stocks that have finally hit some lows or some stocks that finally have hit some highs. So for me, it's kind of a tough bet to go back and say, there's a handful of stocks doing this and there's a handful of stocks doing that, and how that translates to a bigger index. I said coming back from my vacation on January 3rd that I wasn't playing the indices. One, I didn't think that was going to be a lot of movement either way, and that any money to be made would probably be in individual stocks. I don't have any problem trading big indexes like NASDAQ or the S&P, or buying calls or puts on something like the VIX. I do when I don't have an abiding belief that I have an edge. And every single time I've had an edge, there are a lot of stocks on one side of the boat. Right now, there aren't any. In fact, I actually wrote a couple of new scans over the weekend. One I call the Lazarus scan. It's kind of like one I had before. I just kind of updated it. Another one that I call dry paint. And that's the one that has 1 year of stocks going sideways. That goes back to something in fact, I wrote about it in the newsletter this morning, back to Tim Ord, who was a regular guest on TFNN in the early parts of the 2000s. And he really brought up the 10 years of going sideways for gold and how that was going to move into the next big market for gold. Amazingly enough, I should have remembered it, but I didn't, and we'll talk about it more. But it was a interview that Tom did with Jim Sinclair, and I should have thought about it when I made my call back on January 3rd, that I didn't expect the markets to go anywhere fast. And one of the first things Jim Sinclair talked about in the 80s was whenever the market was going sideways, gold did very well. He said, if you really want to be a commodities trader, just trade it when the equities are not going anywhere. And I thought about that on Friday again after the market had closed and gold started moving back up a bit. And I'm not a big fan of gold, let me put it that way. I wouldn't have had a problem trading it, but I would have had to gone back to that interview with Jim Sinclair and him talking about how sideways markets and equities tend to be very good for gold trading anyway, and not a gold investing, but gold trading. I'll try to find that interview because I put it on a CD early on. I knew it would be important. I think I still have it. If I can find it, I'll find that little section and we'll play it tomorrow. But again, you know, it's not just that the market's going to move, and I think it's going to move. It's that there's an abiding belief, and that belief comes from a lot of people being on one side of the market or the other, and we do not have that now. So I can't look at a VIX trade as being very good. There's a lot of individual stocks that have way too many people short, and I'm kind of playing a little of those, and we'll see how those kind of come out. I'm doing okay on a couple of them, and we'll kind of look at the rest and see how that's going on. But you got to have a market that's ready to move, and like a hurricane does not come from, doesn't come and just like a tornado. You're not looking at suddenly there's a tornado. It's more like a hurricane. They start well over in Africa. You start seeing it build. You got lots of time. The time is right. I don't see suddenly a lot of stocks or a market go one way and then next without at least a great deal of preparation. You might find a few individual stocks that do that. I just don't see it. And in fact, we're going to I sent a list to one of my subscribers today who was asking about what I called no pattern being a pattern. That is stock markets or individual stocks that go sideways. And I looked at maybe we'll have time today. I thought maybe I'd go through them this week. Anyway, just my thoughts. There's got to be a market. You got to know that there's a lot of stocks with a lot of people on one side of the boat. Any kind of little tip could really move everybody. And that goes back to crowded trades. And I just don't see a lot of crowded trades right now on either side of the market. although if we look into next month, most of the option market makers are thinking we could go down maybe 50 S&P points. So we'll see if that changes. But right now, I look at that as insurance in case earnings don't go well. If earnings go well, I'm looking for everybody to start back to buying calls next week. Not this week, probably next week. Okay, what else do we have going on out here? Angela Merkel in September was caught on a mic talking to Facebook's CEO over what they called anti-immigrant posts. It was, we don't want an absolute ton of people coming in to this country. But that's hit a little bit bigger in Germany. We'll talk about that and the future of Facebook. And what I think is probably the biggest problem with a lot of these companies out here that are in social media. Talk about that when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, sorry about that. I got this closed up. I found the CD, so I'll try to figure out if I can read this thing. Didn't seem to read right off the bat. I'm hoping it's still good. This has got to be... I knew it was kind of gold when I listened to it. I think it's an interview from 2001. I'll look at the date on the CD, but I quickly put it on a CD, make sure I kept it. So I will check it. Maybe it's just my CD player that doesn't like it. Hope not. Anyway, you know what? It's probably actual CD. That's probably why he doesn't like it. Probably won't play it. I may have to go out to find an old CD player to listen to it. What else is going on? What I wanted to talk about was Facebook. And in September, it didn't really hit the United States, but it is becoming kind of a bigger issue in Europe. And that was that Angela Merkel was caught on the mic, hot mic, on a table mic, talking about to Zuckerberg about literally getting rid of and censoring all posts that she didn't really like on the immigrant crisis. And it's not just the crisis for the immigrants. If you read any of the newspapers over in Europe, there is a huge problem with crime, rape, and it's just there's at least some people think that there are way too many people coming in to Germany. And Merkel doesn't quite like that. So anyway, Facebook CEO Zuckerberg said he would work on it. Well, apparently they put something on, and now censorship is in full swing in Germany going into the May elections for Angela Merkel. If you think some people are hated in America, she has less than at least from most of the magazines that have done some polls, about a 15% approval rating in Germany. I don't think she survives in May. And I think probably trying to get the CEO of Facebook to censor all the dissenting political opinions, probably not a great idea. Although I did have one of the funniest things I did hear over the weekend. I'm not a big football fan, but I did hear this. This is the coach of the Eagles. It was the Eagles? Patriots, excuse me. Belichick.
Well, as you know, I'm not on Snapface and all that, so I don't really get those. But I'm really just worried about getting our team ready to go. Not really too worried about what they put on Instant Chat or whatever it is.
So it's Instant Chat and Snapface. So now I know what to call the Facebook, which is always interesting. I always loved John McCain calling it the Twitter and the Facebook. Always had to use the in front of it. Anyway, this is going to be a bigger issue, and as we look to expansion, or at least companies like Google, Facebook, and others that are really caught in this has always been the weak point in their business model, is at some point someone has to determine what is fair, and if it's the government of a country determining what is fair, it is censorship. If it's the company, then it's just flat-out bias. But very interesting. My thing would be that whoever displaces Merkel probably not going to be very happy with the Facebook censorship either. And whether they're forced to do it or whether they do it as fellow travelers, I'm thinking that we continue to see Google, Facebook, some of these other companies that really delve into this kind of stuff, getting into more hot water, not less, as time goes on. But a lot of people screaming over in Germany right now about what they can and cannot say. But it is getting very, very nasty in Europe. Other things going on out here. I did want to talk about one more thing, because I've had a lot of questions that revolve around politics, other things like that. And without getting into that, I can tell you that I think we are getting ready to make a lot of money in this market. One of the reasons why was a very short passage out of Nassim Taleb's book, Fooled by Randomness. And I saw this, and it really answered a lot of my questions about why a lot of people have such bizarre opinions about things, and why people can get so divorced from reality. And normally when people get very divorced from reality, there's a lot of money to be made in the stock market, especially when people are wrong and they don't want to quit being wrong. They're going to stick to it rather than change their opinion. I think we have a lot of those folks in the market right now that maybe they'll change, but right now I think they're kind of dyed in the wool in their positions. I'm fairly agnostic about market direction. I'm willing to wait. Right now, I don't see, like I said in the previous paragraphs preceding this, I don't have an abiding belief. I do in a few stocks, but that's about it. Anyway, Nassim had this idea, and actually it's a bigger part of it. But there was a notion attributed to a veteran trader. His name was Marty O'Connell. And there was a psychological study about firemen. Anyway, his story was that firemen with too much downtime, who talk to each other for too long, come to agree on many things that an outside impartial observer would find ludicrous. Well, there are some psychological studies, and as traders, we're kind of psychologists, or at least market psychologists. But to me, one of the things that we've always looked at, and The Wisdom of Crowds, another good book on the same subject, showed that the more people you put together in the tighter proximity, the more likely that they're going to come up with insane ideas. And right now, we got a lot of people in very few places in the country that are the most vocal about what's going to happen and everything, including the market. Right now, I think that this fireman notion really works, or really gives you an idea why so many people are committed to something that apparently is not working and does not correlate with what we see in the newspaper every day. But kind of an interesting idea, and that is, some people ask me why I think I have an edge in the market, and I think that it comes down to I don't live in New York and probably Chicago or LA and maybe a handful of other smaller cities, but for the most part, that's it. There isn't a lot of ability to think differently, although most of those cities would pride themselves if you asked them about it. But the reality is not much of a differential in opinion out there. Everybody goes to the same schools. Everybody goes to the same restaurants. And for the most part, everybody listens to the same local news. There isn't a very big diversity of opinion. And if you're looking for a great edge in the market, it is pretty much to know that many times these guys will all be sitting on one side of the boat. And it's because they all talk to each other, they all listen to each other, and they all reinforce their ideas. And impartial observers would find these ideas ludicrous. I think, we'll be talking more about this subject in the weeks to come. Anyway, more charts when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And this week, actually before the bell tomorrow morning, we've got Delta Airlines, United Health Group after the bell, AMD. That one actually had a pretty big move today. We'll look at it. Before the bell on Wednesday, Citigroup, Goldman Sachs. After the bell, Netflix and Xilinx. Thursday, before the bell, Alaska Air, BBT, JB Hunt, and Western Alliance Bank Corp. So we got a handful of the week. Could we get some movement in the Goldman Sachs? That's another one. I don't know why you have to say the in front of the Goldman Sachs. Anyway, Citigroup, probably not enough to move the financials. Goldman Sachs, certainly if they whiff, but I don't think that they will. They did, I think, a pretty good job making, in fact, they made a lot of money on the Brexit issue, and I think they probably did well off the Trump low, too. After the, got Netflix, which is probably the most iffy of the bunch. It may be way ahead of what actually is happening underneath it. Xilinx, now that Altera got bought out by Intel, I think a lot of people think Xilinx will get bought out. I don't know how close that is. I don't know how many people that would want to buy them out have the cash to do it. Maybe more a merger of equals or even lessers, with Xilinx being a little higher on it, on the food chain. Ideally, it would be AMD. At least they'd have kind of a synergy between them and AMD. But AMD's, for a stock that's at $11, probably a $5 stock. Just way too many shorts in it. So, and that's kind of my view this week. Anyway, we'll get to charts out here today. We'll take a look. Let's go out here. And we'll look at some of the stocks that gapped up. We'll go through as many as we can. There's not that many really giving a huge signal, so I'm not going to spend a lot of time out here talking too much about it. Getting ready to go test the last swing high, getting fairly close on Barrick Gold. That's ABX. Volume's okay. We're starting to get into that $18.92 candle from November 2nd. Not quite there, though. 19 million shares. So we might have an identical amount. Anglo Gold, Ashanti Limited. This is just kind of coming back up into its downtrend from these 3 horrible days. You wanted to see somewhere in the neighborhood of 6 million shares. You got about 4. So we'll see how that closes out today. Dynegy, this is just coming and filling its gap, although it did gap up. You wanted to see some kind of decent volume. We're looking at the gap down with huge volume on the 2nd of November of last year. That 27 million shares. We're up with about 3 million shares. About $10 looks like all you're going to get out of Dynegy. HCA Holdings, this one, a little spinning top out here as it goes into previous highs. It's light by about 1.5 million shares to the previous couple of highs, the November and the November 18th. And actually, you could kind of make a case that this is making kind of lower highs, spiked almost up to the previous October 18th high today, but not a lot of juice. Some, not a lot. One of the tweets out there from Donald Trump got real, at least moving earlier in the day. It's Kohl's pretty much gave it all back, and gave it all back. Let's just say what it is. So it didn't hold it. Other retailers on that kind of had a pop, again, giving a great deal of that back. Not a huge amount of volume. Got up past $69 on Walmart today. Rio Tinto, this one is up at previous highs, going up against its December 8th high, $42.61, 9.43 million shares. We're into it today with 2.6 million shares. And you did get into it with 5 million shares, but that's still almost half of that previous high. And if you go back to the November 10th high, it's about 10 million shares. So Rio Tinto kind of up on thin air. Noble Energy, this one had a huge move with volume today. That gave about half of that pop to $40.84 out. But still a nice move out here. I would have liked to seen this thing get a little bit lower for about $35.50 to buy this. But we never got it. And that's kind of the gap ups. Let's take a look at the gap down stocks. And, of course, following Japan, and I think they were down about 1.5% overnight. I can't even say it. DXJ, which is the Japan ETF, down with volume, and it looks like it's going to at least match the volume of the previous low at $49.23. That's December 29th low. JP Morgan down. They had earnings, of course, this morning. Didn't look that bad, but again, kind of thinking that most of these companies are maybe just a little ahead of themselves. And just for this earnings cycle, didn't look that bad. Volume's not all that explosive out here. They kind of went up on light volume for a while, so they pull back a little is not amazing to me. SunTrust Bank's another one out here. This one's down into its December 29th low, $54.40, 3 million shares. We're into that with 2 million shares, but breaking it. Yeah, can you get a little lower? I think you can. There's a nice gap around $52 on that one. VOD, which is Vodafone, gapping down today. Volume looks like it's picking up a little. And you've got a double gap out here. $26 looks like it's written on this one. And maybe you get light volume tomorrow. Maybe that just forms some level of support. That's the gap downs. We'll look at percent advancers today. ABY, which is a bingo yield. ABY, nice move out here, nice candle, but not a lot of volume so far. Avon Products, which is AVP, tried to spike through this level of resistance, which is in the high $5 range going back to November 25th, $5.84. It's, it had 3.65 million shares. You spiked it with 5.5 million shares already today, but it's not holding that high. Avon probably eventually going out of business. It's one of my Walking Dead stocks. See if there's anything else out here that was interesting. Fortuna Silver Mines going up against previous resistance that had 1.4 million shares and 1.7 million shares. It's just going to tie it today. So not an abundance of energy so far, but watch how the volume comes in at the end of the day. Symbol on this one is FSM. Michael's another one that had a nice move up here today. Volume a little bit better. At least, maybe it's going to tie the January 4th high. But again, anything in retail right now getting a little bit of a bounce on some tweet comments. Noble Energy, we talked about this one already. PBF, which is PBF Energy, did test its previous low, did so on lighter volume. Nice gap up today. Energy on this last leg down, still a little more than I would like, but less. We'll talk about this when we come back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. We were looking at this one. Did want to bring up the PBF, which is and did test on much lighter volume than November 30th low that had 3.6 million shares with 2.55 million shares on Friday. So you had a light volume test. You did exactly what you want, which is you pierced the previous low on lighter volume and not just on a little bit of volume. I'm a fan of breaking volume on about half, either on the way up or the way down. In this case was the way down. Energy was a little off from this last high on January 3rd. Probably not enough for me to get too excited on this particular one. But if you were, certainly this does not be one that you wanted to be short coming in to this morning if you were on the downside on that one. PVH, which is, come on, got to look at some of these out here. There we go. PVH, which had a nice move again. Now, this one had been going sideways back in to this huge gap down. Let me get back out here. This thing had the big volume down day on the 15th of December. had some huge volume. We got about halfway into it, which is exactly what you should expect on a counter move, is somewhere halfway into the gap or halfway into the high volume candle. Now, that day you had, on the 15th, you had 4 million shares. Today you got about 2.4, and that's going to tell you can spike back into these with lighter volume, but most of the time you're going to give it back up. I do kind of like this wishy-washy pattern that started a couple of days, the 19th, and actually kind of went back in out here. You had a little bit more volume on Friday, but a nice reversal out here today. And I don't know if you can say more about that. Snow, I haven't checked and seen the latest snow forecast, but man, this one had a rocket on Friday. This is Intra-West Resorts Holdings. These guys have a lot of things out in the mountains for the snow bunnies. Huge volume on Friday. Another little tick up here today, but volume not falling through with it. THC, which is Tenet Healthcare. This thing did gap down on monstrous volume back on the election. And that was on the 8th of November, and the 9th, actually, the day it gapped down, was 17.4 million shares. Back into it with just 4 million shares today. So a lot of these stocks, that have kind of come back, they're in about halfway into the unfilled gap already. Gave back about half of what they were gonna. So I think if you were playing a lot of these bounces off the bottom, you probably got as much money as you thought you could. We're off about 10 points on the S&P cash now, and volume pretty average at 2.46 billion shares. So not a big indication that anything's happening out here other than market just kind of flailing around as it has since the beginning of the year. USLV, nice little gap up. It's going back up into its previous December 7th high that had 1.6 million shares. It's still shy of that, but you've got 1.8 million shares. So I'm figuring that you pretty much have, this thing's filling a gap also on the way down from the 15th of December when it gapped down on 3.4 million shares. So again, a lot of these stocks on the way up, they're hitting resistance. A lot of stocks on the way down hitting resistance, but not enough to really make me think that we are out of the doldrums yet. We're down 10 points today. Can we bounce 10 points tomorrow? Certainly think so, but that 2270 kind of looks like what the market is honing in for expiration on Friday. We'll talk about more about options tomorrow, see how they panned out after the long weekend, but I'll look at the numbers tonight. In the meantime, sell when you can, not when you have to, and we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.